Fed officials met in Jackson Hole, Wyoming to discuss the state of the economy. Fed Chief Jerome Powell predicted more pain for households and businesses until inflation is brought down. What does that all mean for the economy? Joining me now, JP Morgan Asset Management Chief Global Strategist David Kelly. David, we are thrilled to have you in the studio. Thank you so much for joining us.
Great to be here.
So, got to talk about what happened Friday. In a span of about 10 minutes, the market tanked. So can you tell us, what are investors making of the Fed's more hawkish stance? And, what's the path forward for the Fed?
Well, of course, I think that move is an overreaction. The Fed, frankly, Jerome Powell's speech was pretty much what we expected it to be. He wants to sound very, very tough on inflation. He wants to say he really, 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 really means it. He's going to bring inflation down. And that's really all that speech was about. I don't really think it changed the odds very much in terms of what they're going to do in September. But broadly speaking, they're saying they want to fight inflation, and that's really what the market reacted to.
So what do you think will happen in September in terms of the rate hike? Are we talking 50, 75 basis points?
It's a very close call. I think it sounds like we might get 75 basis points. But what we could have is 75 basis points, but then Jay Powell saying, oh, by the way, that probably is it. The next move could be lower. And so I think we may end up with 25 basis points more tightening when all is said and done than we would have had otherwise. I think the data between now and then will support, particularly I think we'll see lower inflation. I think it will support the money going 50. But as I say, they want to sound tough, and going 75 in September obviously would sound tough. So
you were talking about perhaps seeing lower inflation. Is there evidence of that happening now?
Oh, yes. I mean, we've seen gasoline prices fall almost every single day since the middle of June. We've also seen airline fares move. We can see we've got very good data on that. We've seen used car prices fall. They soared to huge levels. And we're also seeing a lot of the bottlenecks in the global economy are clearing. There are fewer people complaining of slow deliveries. Things are actually arriving that have been stuck on ships. So all of this suggests that inflation is, in fact, coming down now.
So when we're talking about inflation, right, economics tends to deal in the aggregate. Mm-hmm. And when do you think households will actually be seeing the impacts of lower inflation?
Well, it depends, of course, what people are focused on. The most important number that people focus on in inflation is actually gasoline prices, because you can't drive 2 city blocks in America without figuring out what the price of a gallon of gas is. Mm-hmm. And so seeing that come down has actually helped consumer confidence. People realize that. But I think people are going to be upset by higher electricity prices, higher natural gas prices as we go into the winter. So that's still going to be there. But overall, other things that were just going up a lot are going to go up less, and there will be more availability of goods. And I think that'll help people feel a little bit better.
And how do you think the Fed is going to be able to avoid a recession? If we do have one, how bad do you think it will be?
I think if we had a recession, it would be pretty mild, and that's because none of the cyclical sectors of the economy are particularly elevated right now. We don't have a housing boom or an auto boom or an inventory boom. They're all pretty low at pretty low levels, and it's very hard to injure yourself badly jumping out of a basement window. Right. And that's kind of where we are. But it's a really close call in recession. It's kind of like you're wandering around the edge of a pool, and there's a kids' party going on, and the chance of somebody bumping you in. I mean, it's possible to avoid a recession if nothing goes wrong, but one bad crisis right now would put us in recession, because the economy is very vulnerable to recession right now.
Absolutely. And I mean, even if it is a mild recession, you don't want to minimize the impact of it, which goes to next month's jobs report. Mm-hmm. Just curious, what are you expecting to see? It
still looks pretty strong. We've had some good indicators in terms of unemployment claims and online job ads. So we've had a lot of pent-up demand for workers, and that's helping that part of the economy stay strong, even while demand slows. So we could get, I think, 300,000 jobs added. I think the unemployment rate stays at 3.4, could even come down. So I think that much looks pretty good, or 3.5, but it could come down. So I think that looks pretty good, but I think it will weaken later on this year.
Excellent. And we do have to give you credit. So the last time you were on set with us, you made a pretty smart call on Bitcoin.
Frankly, I don't see any real value in it. To me, it's a cult masquerading as a currency.
So I think when we see where Bitcoin prices have gone since, just kind of curious to hear your take right now, since we've had such a huge drop in Bitcoin.
Yeah, fewer true believers in the cult at this stage, but it still has got no value. And I think one of the things that happens is when the Federal Reserve raises interest rates, the cost of making these bets goes up. I mean, if you could borrow money for nothing, as was the case for much of the last 10 years, then you would invest in things which are purely speculative fluff. And Bitcoin is speculative fluff. So, right now, I know there are people who still want to put money in it. It still hasn't fallen below 20,000 recently. But I think, the true value of it is nothing. And so I do think there's a lot of vulnerability. I would not be putting long-term money into Bitcoin.
Speculative fluff, I think that is going to get the attention of some of our viewers. Thank you so much for joining us.
Anytime.